from the Reserve Bank. To begin with, as is the practice, I'll request Governor to make his opening remarks. After that, we'll have the question answers. Governor, sir.
Well, good morning, good afternoon, and welcome to this press conference. I already made my statement, which we have also uploaded, and I'm sure you would have already gone through it. I do not have anything more to add. The MPC resolution, the rationale for it, and some of the other additional measures that we have brought in are very clearly communicated over there. So I think we can directly move towards the Q&A. I think that will give more time for all of you to ask additional questions. So we can begin, I think, with the Q&A directly.
Thank you, sir. Just before we begin, a couple of announcements as always. I'll request you all to please wait for your turn and restrict to one question per person. And if time permits, we can always go back for the other one. So you can see my colleagues on the aisle with mics in their hands, so they will give the mics to you. So please speak in the mic so that people outside can also hear you. Sir, there are 27 participants from the media today, and with your permission, I'll call out their names. I'll request Lata from CNBC to ask her question.
Thank you, Governor and Deputy Governors. Sir, I just want to first clarify a language part and then my question. Because in Para 7, where you are announcing the rate cut, you say that the MPC remains unambiguously focused on durable alignment of inflation while supporting growth. So inflation first, then growth. In the immediate next paragraph, you are saying the growth inflation dynamics open up policy space for the MPC to support growth while remaining focused on aligning inflation. So should we read this as deliberate or casual? And the question I have is, rate cuts normally get passed on when liquidity is surplus. So would your stated policy be to keep liquidity surplus in the interbank system or just adequate? Thank you.
So let me come to your second question first. I think that was attempted in the statement also that we made. And you would have observed in the last couple of months and even before that, that it has been the endeavor of Reserve Bank to provide as much liquidity as is required. And when we say liquidity, as I also mentioned in my statement, it is both, overnight as well as durable liquidity. We have taken a number of steps. You are aware, that we introduced, perhaps for the first time, a regular pre-announced every day overnight repo rate operation. So this was primarily to give confidence to everyone that this window is always available insofar as the transient or the overnight liquidity is concerned. Even for the longer term durable liquidity, we have announced steps of about 1.5 lakh crore. Some of it which have already been put into operation. 20,000 crore of OMOs have already been done, another 40,000 crore later on. Today, we are going to have a 56-day VRR for 50,000 crore. We are always watchful. We'll be nimble. I want to assure that we'll be very, very proactive in providing whatever liquidity requirements are needed. That's one of our jobs, and we will do it. Coming to your first question, I really did not, understand as to what you are. Everything, every statement, every word that is mentioned in the MPC statement, and especially, the resolution, because you were pointing at the resolution, is very, very well crafted, thought out, and deliberate.
Thank you, sir.
Thank you.
Thank you, sir. Next will be Swati from Reuters.
Thank you so much, sir. So your growth forecast for next year is at 6.7%. This is yet again at the upper end of the government's range. They've given us a 6.3 to 6.8. And as we saw last year as well, RBI had to lower their projection towards the end. What gives you so much optimism on growth, especially when you're saying that, you remain neutral purely because inflation risks could come up again with the heat waves, etc. So what gives you the optimism on growth, sir? Thank you.
See, all the parameters we analyze very regularly, the high frequency indicators that we have, and whether one looks at agriculture with good reservoir levels, and I've made detailed assessments even in my MPC statement. You can go through them as to what are the reasons actually. They are all given over there. So in interest of time, I am just shortly, very briefly indicating them. So whether it is in terms of agriculture, whether it is in terms of consumption. Now you also recently had the Nielsen survey, the consumption numbers over there at 7% plus augur very well, and this is the kind or the range of projections that we too have for personal consumption. And similarly, the manufacturing activity, is also kind of picking up. The PMI levels that we got were very comfortable over there. So all this gives us the optimism that we will have what the numbers we have projected. I also mentioned in my statement that we will continue to improve, our macroeconomic models, our nowcasts and forecasts, so as to be able to give as precise a number as possible. Please bear in mind that these are just forecasts. Every day situations change, and as people say, as your facts change, your opinions also change. So those it's subject to that. Thank you.
Thank you, sir. We'll move to Mr. Manojit from Business Standard.
Thank you, Governor. Thank you, Puneet. Is it fair to say that at this point in time the priority is growth over inflation? And what could be the real rate at this juncture of growth inflation dynamics?
See, the RBI Act has given us a very, very clear mandate. Our primary objective, see, for some countries, you are aware, it's a dual objective, where very explicit dual objective to have both price stability and growth. In our case, the primary objective, that is not to say, the other objective is not important. The primary objective is inflation, is price stability, keeping in view the growth objective. So we will continuously, focus on that, trying to meet, these objectives. We will try to align the inflation with the target that has been given to us, at the same time supporting growth. At present, as the resolution also says, we felt that time has come that we can be more supportive of growth because inflation is coming down. It is expected to go down. However, it also says that we will maintain a neutral stance so that we are able to proactively respond to the evolving macroeconomic conditions. Thank you.
Sir,
Thank you.
Real rate. What could be the real rate according to you, given the current growth inflation dynamics, the real interest rate?
See, today we are at 6.25%, and the inflation is 5.2%. That is the CPI inflation. The WPI is lower, so that would give you, a real rate of about, let's say, 1.5% or so. That's what it is at present.
Thank you, sir. Moving on, we'll have Mr. Anup from Bloomberg.
Sir, coming back to the inflation forecast, inflation target again. We have 2 to 6% inflation band. You have that convenience of that band also. You mentioned that of the flexible inflation targeting, and at the same time your original target is 4% for the medium term. So just wondering, will you be comfortable if inflation remains within the 2 to 6% range, or you will want to see inflation durably settling around 4%?
Sorry, what did you say your name is?
Anup Roy from Bloomberg.
Anup Roy. I'll ask you, when you go to an exam, in that exam, the maximum marks are let's say 100. The passing marks are 40. What do you aspire for? Do you aspire to pass, or do you aspire, to do extremely well? Well, some may, like to just pass. In RBI, we like to we like to be on top of everything.
Thank you, sir. May I have Mr. Ankur from ET Now?
Hello, Ankur Mishra from ET Now. While economic survey says that 6.3 to 6.8% is the growth forecast for the next financial year, and you have taken the upper end. When I asked this question to CEA, that is there a possibility of 7% plus growth, he said yes, it is possible. I want to ask you now, as per your assessment, is there an optimistic possibility of that? And one more question, sir. Regarding the ECL provisioning and project financing norms, you have mentioned in the statement right at the front, but you also said phased implementation. Now, these implementations are as soon as from next month or 1st of April. As per the draft norms, of course, the final norms are yet to come. In project financing norms, it was mentioned that it should be 2% in the current financial year, and then in FY26 and FY27. Similarly, for LCR norms also, 1st April 2025 was the tentative date which was given. I want to understand, where do we stand here? Is there going to be a deferment, or these will be implemented? Thank you.
Your first question, whether 7% is achievable. See, these are difficult questions to answer, but nevertheless, I would like to stick my neck out and say that certainly India can, achieve 7% and plus growth rate. We should certainly, aspire for that. Coming to your second question, which is related to some of the guidelines, that we have issued, LCR, ECL, project financing norms, etc., etc. I made it very, very clear, that we will be doing a balancing act. It is not only about stability. It comes with a cost. We will be very, very conscious of the costs that it brings in, so that, we make efficient use of our resources. I want to also clarify, because you asked specifically about LCR, and we did make a mention over there that we will give sufficient time. I do not think 31/3/2025 is giving sufficient time. So certainly they will not be implemented, before, at least, before 31/3/2026. That's the kind of timeline that is needed at the minimum. The draft regulations were circulated. We have got comments. We are examining them. It will take time for us to examine. You see, liquidity is important for everyone. Let's please, try to appreciate that why we are doing this. We are doing this primarily, so that there is no run, on the banks. You would have witnessed it, in 2023, there was a run on some of the US banks because they do not have, such kind of regulations. Now we have those regulations. But whether the liquidity that we have, provisions that we have, whether they are sufficient or not, that and they need to be always, continuously need to be improved. So that's why, we had provided for certain more liquidity to be kept vis-a-vis some of the deposits which we felt, would perhaps, have a higher runoff. That has been provided in these draft regulations. At the same time, we have got now comments from other stakeholders that there may be lower liquidity requirements for some of the other deposits. So we are examining that also. As soon as we are able to examine all the suggestions. And I'm very happy, to note, having come here to the Reserve Bank, that we do, an impact analysis over here. So That impact analysis will be done, has been done to some extent, but come, with the suggestions that have now come in, we are revising our estimates, our impact analysis, and we will give, a time frame as to when one can expect LCR. Similarly, the other guidelines also we will give sufficient time frame. You can rest assured, that they will certainly not be implemented as quickly as 31/3/2025, because that will certainly not be sufficient time. We do not want to cause, any disruption. We will ensure a smooth transition. Thank you.
Said not until March 26.
Yes.
Thank you, sir. Please, let's go with the flow.
Let him ask a clarificatory question only with regard to this.
Please speak in the mic.
26. It will not be before 25.
Be very, very clear. It's more than 1 year. 2 months, less than 2 months is too short a window for the banks. We realize that, and so we will give at least 31. At least doesn't mean it has to be 31/3/2026. We'll aspire for that, but we want to make it very smooth, and it will also be phased. It will not be that all the regulations, all the norms kick in from day one, which will be at the earliest 31/3/2026.
Thank you, sir. Next is Hamsini from Money Control.
Hi, sir. I'll stay put on this part around regulations. Your language also today seemed to indicate that there will be a lot more consultative process in the way that you would go about building regulations. You did clarify on LCR, but what we've also seen, especially in the last 4 years, and more so in the last 1.5 years, is certain banks and NBFCs facing ban on businesses, certain aspects of businesses. There are 2 large banks still waiting to come out of restrictive business policies. Would you rethink your approach on how you would want to target banks or work with them to rectify some of the follies? And as a clarification, you did mention about LCR, but what about on project finance and investment guidelines that banks are permitted to take in subsidiaries, etc.? Would you want to defer, or there has been request for a deferment on that as well? Would you want to consider those proposed policies also favorably, sir?
See, ECL was only a discussion paper. Even the draft is not out. So there is no time frame for implementation of ECL guidelines. Similarly, project finance, you can rest assured, I think they will need more time. 31/3/2026 is the earliest. Moreover, they need to be seen in conjunction with each other. There is a certain amount of overlap between ECL and project finance. So we are examining, because for project finance, the draft regulations were certainly published, comments have been received, suggestions have been received. We are examining them, and we'll come out with something, I want to assure all of you, that which balances the interests of the public, the depositors, the financial stability, which is very, very important for our country, and at the same time, the concerns of the banks, keeping in mind the efficient use of resources. And what was your second question? Sorry, is on, two banks, where we have cease and desist measures. See, these measures are taken after great consideration, after great thought, after giving opportunity to these entities, whether it is these banks or others. I'm not, making reference to any particular entity. And these are measures actually, of last resort. We would not like to use them, too often. This is a measure of last resort to be used in the rarest of the rare circumstances, when all other measures have actually failed. And they are again, in the interest of the public, and we'll keep, this policy going forward as well. Thank you.
Thank you, sir. Next will be Ms. Gopika from the Mint.
Thank you, Puneet. Thank you, Governor. My question is on inflation forecast. You've retained the inflation forecast for this year and next year. But have you taken into account the impact of rupee depreciation while accounting, or have you factored in the impact of rupee depreciation while calculating or looking at the forecast? And my second question is on the new Deputy Governor, for monetary policy, when can we expect the appointment?
Second question you have to ask the government, it's not for me. Your first question, yes. The latest rupee to dollar rate was taken into account while making all our projections. So, and we also do various sensitivity analysis. So yes, a brief answer to your question is yes, that was certainly considered while making our projections.
थैंक यू सर. अब मैं जी बिजनेस से एकता सूरी को आमंत्रित करूंगा.
गुड आफ्टरनून सर. सर, हमने आपकी स्पीच में सुना कि आपने फ्रॉड्स के ऊपर बात की कि .in होगा बैंकों का डोमेन नेम, लेकिन बहुत सारे इश्यूज हैं जो कस्टमर्स फेस करते हैं फ्रॉड्स की. अगर हम बात करें, सबसे पहले कोई रिपोर्ट करता है फ्रॉड तो उसे पैसा जल्दी वापस नहीं मिलता. दूसरा, पेस्की कॉल्स बहुत ज़्यादा आते हैं नॉर्मल मोबाइल नंबर से. बहुत बार आपने बोला है कि आप टॉपअप लोन्स, जो होम टॉपअप लोन्स है, उसे पर्सनल लोन्स की तरह एडवर्टाइज मत करें. अभी भी वो हो रहा है. 1600-140 नंबर्स भी आपने बोला है ट्रांजैक्शंस और मार्केटिंग के लिए होंगे, लेकिन वो भी कोई नहीं सुन रहा. तो ऐसे सिनेरियो में क्या आरबीआई कोई स्ट्रिक्ट एक्शन लेगा बैंकों के ऊपर ताकि ये कस्टमर का बचाव हो इन सब सिनेरियोज में?
निश्चित रूप से हमारा पूरा प्रयास रहेगा कि जो भी हमारे ग्राहक हैं, जो जनता है, उनको अधिक से अधिक सुविधाजनक तरीके से बैंकिंग की समस्त सेवाएं उपलब्ध हों. चाहे वो बैंकिंग फ्रॉड से संबंधित हो, जैसा कि आपने कहा, या आपने कहा पेस्की कॉल्स उनको आते हैं, उसमें किस प्रकार से हमें उसमें कार्य करना चाहिए, किस प्रकार से हमें उन्हें हिदायत देनी चाहिए और क्या हमें उसके खिलाफ एक्शन लेना चाहिए, वो निश्चित रूप से इस संदर्भ में लिया जाएगा. और अधिक आपने कई सारी छोटी छोटी चीजें पूछी हैं. विस्तृत जानकारी के लिए मैं अनुरोध करूंगा हमारे डीजीज को कि वो आपको इसके बारे में कुछ और, क्योंकि हमने कई कदम इसके बारे में ऑलरेडी लिए हैं, तो संक्षेप में मैं रिक्वेस्ट करूंगा स्वामीनाथन जी को और राजेश्वर राव को कि वो इसके बारे में बताएं. और आप यू कैन स्पीक इन.
Yeah, thank you, sir. Thank you. I think I'll take the liberty of responding in English.
I know you
to avoid any ambiguity.
Yes.
To avoid any ambiguity. Thank you, sir. I think just to supplement on that, yes, you also mentioned about the steps that we have already taken. So as far as the regulated entities are concerned, instructions are already in place to use certain series of 140 or 1600. We also do a lot of awareness campaigns to educate the consumers how to stay away from pesky or fraudulent calls. It is also put in place from a regulation perspective, limiting the liability of customers in unauthorized electronic banking transactions is in place. The provision to give us shadow credit pending full investigation is also kept in place. And adherence to this is also examined when we do the on-site supervision. But oftentimes there are also pesky calls that emanate from unregulated entities and apps and platforms. This is something which only an active collaboration of the government, regulator and the law enforcement we will be able to work on. But this is something which we are conscious of, and we will take every possible step to ensure that the consumer's interest is protected. And wherever there has been a loss, it is our endeavor to work towards an early redressal.
Sir, I know you've mentioned a lot of things that are already in place, but since banks, even if RBI continuously keeps on saying that you have to do this, banks do not listen. Till the date, banks have advertised home top-up loans as personal loans, saying take the loan, use it for your marriage, use it for travel. Or, when you go for a loan, they insist on taking, you have to take an insurance or a credit card. Mis-selling is on rampant. So on these issues, any supervisory action?
See, there are 2-3 issues that you mentioned. Each of them, of course, the framework is certainly in place. Oftentimes, as Governor also mentioned, many of this behavior which is not consistent with the regulations, we resolve through dialogue. A supervisory action which gets publicized is only in the rarest of the rare cases where there are egregious violation or the most outlier behavior. Otherwise, oftentimes, the supervisors engage with the entities on a bilateral basis and ensure that the regulatory guidelines are adhered to. So that shall be our endeavor. You may not get to read them in the media, but wherever there is a non-compliance, on an annual basis and also on an ongoing basis, we deal with the entities, and oftentimes they all are complied with over the course of time.
Just to add to DG Swaminathan, the guidelines are already in place regarding top-up loans, what are the end use, etc. If it is given for unauthorized different purposes, it would be taken as an unsecured lending and will have to be dealt with accordingly by the bank. That is one point. As regards this mis-selling and forced insurance, RBI guidelines are already in place regarding this mis-selling issues, and we are also looking at comprehensively reviewing these guidelines. We should be trying to come out with some guidelines shortly on this area also, on the conduct of the banks in various areas.
Thank you, sirs. अब मैं अनुराग शाह से आग्रह करूंगा कि वो अपना प्रश्न पूछें.
थैंक यू पुनीत सर, थैंक यू गवर्नर. सर, जिस तरह से आरबीआई ने भी कहा था कि जो बैंकों के द्वारा इंश्योरेंस कंपनियों में निवेश किया जाता है या फिर जो दूसरी सब्सिडरीज में निवेश किया जाता है, उसके निवेश से जुड़ी हुई गाइडलाइन जो है वो आरबीआई की तरफ से कब तक आ जाएगी, और क्या उसमें हम ये भी देख सकते हैं कि जो बड़ी इंश्योरेंस कंपनी है, कोई बैंक के अंदर मेजॉरिटी हिस्सा खरीदने का भी उस तरह का प्रावधान होगा? और सर, अभी जब जिस तरह से कुछ वक्त पहले वित्त मंत्री ने भी बैंकिंग प्लेटफॉर्म के जरिए मिस सेलिंग की चिंता जताई थी, चीफ आईआरडीए के चेयरमैन के द्वारा भी चिंता जताई गई थी, स्पेशली इंश्योरेंस के संदर्भ में, तो क्या आरबीआई का डेटा भी उसको सपोर्ट करता है या फिर आरबीआई का क्या कहना है?
नहीं, देखिए, जैसा कि अभी आपको स्वामीनाथन डीजी ने बताया कि मिस सेलिंग के हम लोग बिल्कुल सख्त खिलाफ हैं. कोई भी इस प्रकार का यदि वाकया होता है, इस प्रकार का कोई भी इंस्टेंस हमारे ध्यान में आता है, तो निश्चित रूप से उसके विरुद्ध सख्त से सख्त कार्रवाई की जाएगी. आप इस बात के बारे में बिल्कुल 100% निश्चिंत रहें कि किसी भी ग्राहक के विरुद्ध यदि मिस सेलिंग की कोई भी शिकायत है तो रिजर्व बैंक उसके लिए उसके साथ में नहीं है और उसके विरुद्ध में उस बैंक या रेगुलेटेड एंटिटी के विरुद्ध में कार्रवाई होगी. कार्रवाई किस प्रकार से होगी, जैसा कि टीजी स्वामीनाथन जी ने भी आपको बताया, वो हमारे को उसके लिए ऐसा नहीं है कि हम उसको बैंक को बोलें कि हम आपका रजिस्ट्रेशन ही बंद कर देते हैं, लाइसेंस बंद कर देते हैं. ऐसा तो नहीं किया जा सकता, आप भी ये समझेंगे. लेकिन हम इसके लिए बहुत ज़्यादा गंभीर हैं और इस प्रकार की अगर कोई घटनाएं होती हैं तो उनको गंभीरता से लिया जाएगा. पहला आपका जो प्रश्न था वो था कि किस स्वरूप में जो बैंकिंग कंपनियां हैं और उन्होंने कई सारी अपनी सब्सिडरीज वगैरह बनाई हुई हैं, एनबीएफसीज हैं, इंश्योरेंस कंपनीज हैं, उसके बारे में एक मसौदा जो नियम का है, रेगुलेशंस का, वो हमने प्रकाशित किया है और उसके बारे में कई सारे सुझाव हमारे पास में, टिप्पणियां, सुझाव हमारे पास में आए हुए हैं, उनका हम अध्ययन कर रहे हैं. देखिए, जैसे मैंने आपको बताया, ये सब चीज़ों को हम ध्यान में रखते हुए उनके सुझावों को पूरा से गहनता से अध्ययन करने के बाद में ही कोई निर्णय लेंगे. मैं इतना ही इसके ऊपर में आपको बताना चाहूँगा कि अगर कोई कंपनी या बैंक एक और सब्सिडरी के मार्फत से वो ही बिजनेस, वो ही व्यापार करती है, तो उससे जो है दो प्रकार की हमारे को समस्याएं सामने आती हैं. एक, कॉन्फ्लिक्ट ऑफ इंटरेस्ट रहेगा, क्योंकि वो सेम कंपनी है तो इस कंपनी में व्यापार हो या उसमें हो तो एक कॉन्फ्लिक्ट ऑफ इंटरेस्ट है. दूसरा जो इसके अंदर में समस्या है वो ये है कि एक रेगुलेटरी आर्बिट्राज है. बैंक्स एक अलग कानून के ढांचे में कार्य करते हैं, एनबीएफसीज एक अलग कानून के ढांचे में करते हैं, तो उसकी वजह से जो रिस्क्स हैं एनबीएफसीज के वो बैंक्स के ऊपर में न आए, इसके पीछे में ये जो हमने जो मसौदा प्रकाशित किया है उसके पीछे में ये है, ये उसके पीछे में विचार है। ये बात भी हमें ध्यान है कि कई सारी कंपनियां, कई सारे बैंक्स ऑलरेडी इसमें लेगेसी इश्यूज हैं, तो वो ऑलरेडी जो हैं उन्होंने इस प्रकार की कई सारे एनबीएफसीज कंपनियां, सब्सिडीज स्थापित की हुई हैं। तो उनके बारे में अब हमें क्या करना होगा, क्योंकि हमने ही उनको इस प्रकार की पहले अनुमति दी। तो अब इन सब चीजों को सोच करके और विचार करके किस प्रकार से हम आगे इसमें एक सब मिलजुल करके, ताकि लोगों के जो डिपॉजिटर्स हैं उनके भी ध्यान को, हित को ऊपर रखते हुए, और साथ ही साथ जो हमारे अन्य जो हितधारक हैं जिनमें बैंक भी सम्मिलित हैं, बैंक के ओनर्स सम्मिलित हैं, तो उनको सबको ध्यान में रखते हुए ही हम कोई कदम इसके बारे में लेंगे।
धन्यवाद सर। अब नेक्स्ट विल बी मिस्टर विश्वनाथ फ्रॉम एनडीटीवी प्रॉफिट।
Good afternoon, Governor. Thank you so much, Puneet sir. Governor Vishwanath Nair from ADB Profit. Two things that made sort of a debut in your speech. First was the less restrictive monetary policy, which I think a lot of people expected a rate cut but weren't sure how long this is going to last. So I just want to understand from you, when you say that the MPC feels a less restrictive monetary policy is appropriate in the current juncture, is it limited to this policy, or are we talking about the next few quarters? And the others, like second part which made a debut, and that's in continuation with these regulatory moves, is the cost of regulation, which I've never heard the RBI talk about. At least the RBI always talks about the need for regulation, not so much the cost for regulation. Yes. I just wanted to understand from you, so far a lot of my colleagues here have written about how the RBI is a no-nonsense regulator, sort of an iron fist type of regulator. Are we changing that face at all?
No, I can't talk, about the past. It will not be correct on my part, to sit on judgment. But I would certainly say that RBI as an institution has been able to, over the years, carry out the mandate that has been given to it. And I would also like to say that I do think that the cost of regulation may not have heard of it is a different thing. But I think back, consciously or unconsciously, I think consciously, this would certainly have been a factor in determining what, they are going to do. You may not have heard it, that's a different thing. So I can't say about that. But what one can see, having been outside the RBI and having interacted with the RBI, been on board of the RBI, is that certainly, all these factors are certainly, considered while making any regulations. It's not only, about financial stability, it is also, about the cost at which, these things come in. I only made it very, very clear so that everyone is, assured about that. So this is one. And second, you said, whether this is policy only for this. Well, obviously, when we are keeping a neutral stance, and as was mentioned, the rationale for that is the tremendous uncertainties, that we are facing today. That does not call us, to change our stance. So our stance remains neutral. This less restrictive policy is only, for this particular MPC meeting, and not, going forward. This stance continues to be neutral. Thank you.
Thank you, sir. Next, we'll have Mr. Chris from FT.
Hi there. Thank you very much. I was wondering how concerned you are about the recent pressure on the rupee going forwards, and are you also worried about imported inflation?
Well, the rupee is the rate, that the rupee settles at is a function, of the demand and supply, number one. Number two, I would also like to say, that we should really, not be looking at, but that's, perhaps our job, and so we do it. We should not really be looking at, a day-to-day kind of a volatility. It is, more the long-term rate, that we should be looking at. And when I say this, I say this, not only for the rupee, but also for other asset classes, whether it is the Sensex or the Nifty, or whether, it is the gold prices or the asset prices. Day-to-day movements may not be, all that, important. As I mentioned, this was certainly factored in while deciding on the rate cut and the stance that we are maintaining. It was certainly factored in. That's one thing I would like to say. And the second thing is, of course, as you are aware, that a higher or a lower, or depreciated rupee certainly, puts pressure on inflation. But at the same time, global uncertainties are also, I think a higher worry, for us would be the global uncertainties as to how, that pans out. So global uncertainties, even if, the trade wars, the tariff trade wars were not to carry out, but just the uncertainty in itself is something, which is worrisome. And that, because, that has direct impact on growth, that has direct impact on investment decisions, that has direct impact on consumption expenditure decisions, which get deferred. So let's keep in mind, that and a lot of, the appreciation of the dollar and the depreciation of the rupee is actually linked, to this uncertainty. So this uncertainty being the underlying cause, to a great extent, of the dollar strengthening, rupee depreciation, is not good for growth, and it's not good for imported inflation. So that is something, which we all need to be cognizant about. Thank you.
Thank you, sir. Next would be Mr. Siddharth from Informist.
Thank you, sir. Afternoon, Governor. Good afternoon. So, just a question on liquidity. The government's high cash balances in recent years has made the RBI's job of managing liquidity difficult. In the FY26 budget, the WMA limit has been increased substantially to 5 lakh crore. The Economic Affairs Secretary also said the government will aim to keep a lean cash position.
Which limit you said has been increased to 5 lakh?
WMA. The recourse, total recourse for WMA.
Okay.
And the Secretary also said that they'll try to keep a lean cash position, but much of the cash holdings is drawn to states' surplus and their investments in 14-day T-bills. I think end of FY24 it was in excess of 2.5 lakh crores. Is there anything happening between the government and the RBI to discourage states from holding such large surpluses, maybe reduce the interest on these T-bills further, allow them to park it with banks, their money with banks maybe? Second, just on, you mentioned tremendous uncertainties. Does this that we face today, does this make a case for the RBI to perhaps increase its contingency risk buffer over 6.5% recommended by the Jalan Committee? Thank you.
See again your second question and first question. I'll ask DG Rajesh Rao to come in, because there has been some engagement with the state government which he's better aware of. So he'll answer that.
I'll take
or
that.
Mr. Ravi Shankar, he will take care of your question. Coming to your second question, see, the Bimal Jalan committee has given 5.5% to 6.5% ratio of the balance sheet to be maintained as a buffer for us. We are at 6.5%, 31/3/2024. That is, the overall framework is being reviewed, and basis that if the committee feels that there is any change, could be upward, downward. I'm not suggesting that because of uncertainties it needs to be increased. I'm not suggesting that. That is under process, and basis that we will take a decision as per the recommendations of the committee which is reviewing this. For your first question, I request Dr. Mr. Ravi Shankar to answer it.
Thank you, sir. I'll start off with a clarification. The 5 lakh crore number you are referring to is probably the usage. That is, every time something is withdrawn, it's cumulatively added. So that doesn't give an idea of the limit. The limit has, remained where it is, quite consistent first half and second half, and that has been adequate so far. But depending on how government's cash position evolves, those limits will be fixed going forward for the first half and second half of the year. Transient liquidity, day-to-day liquidity, changes because of many reasons, but the larger changes there happen mainly because of government cash balances. So managing day-to-day liquidity is essentially managing the impact of government's expenditures and revenues and the resulting cash balances. That is a job that we do. That is a job that we will continue to do on a day-to-day basis. As far as how state government surplus affects central government's cash balance and therefore has an impact on liquidity in the system, this is something that we have always been sensitizing state governments whenever we interact them. As you would know, we are the debt managers for state governments as well. We discuss with them on ways to manage cash as efficiently as possible, but at the end of the day, their expenditure decisions are their decisions, and the resultant cash surplus is something we have a system under which it is currently managed. Some of it comes into auction, treasury bills that are auctioned in the non-competitive section. Some of them go as ad hoc treasury bills. So that arrangement has worked fine, and we believe that as we go forward, state governments also will be able to manage their liquidity more efficiently. Thank you.
I may supplement over here that, this is our job. We are not looking, the state governments and the central governments should be, and many of them are, managing their liquidity efficiently. And whatever support, we can give to them, that we are providing. But we are not looking at liquidity being provided by government. No, they have to do their job. They have to manage their cash balances efficiently. And we, taking that into account, we will provide as much liquidity as is required. We are not looking at the government really, to be providing that liquidity. That is not their job. That is our job, and we will continue to do that job.
So, just a clarification from my first answer. You said it's being reviewed. You don't know whether the CRB will be...
I think every 5 years or so.
I think the Jalan Committee recommendations were for the period till 31st of March, 30th June 2019 to 2024. Internally, we are reviewing the whole thing and seeing whether any changes are warranted, etc. Then internally, we'll take it up appropriately through the process, and then if we need to engage with the government or the board, we will do it at a later point in time. But the internal review is on in the process.
So this is the entire economic capital framework which is being reviewed?
Yes.
Okay. Thank you, sirs. I'd request Ms. Sangeeta Mehta from Economic Times.
Thank you, sir. Sir, given that rate cut will immediately bring down the home loans and all the loans that are linked to EBLR, that is given. In your assessment, when do you see the transmission of rate cut in deposit rates and lending rates, the MCLR and the other rates in the system? By when do you see that happening?
See, many of these deposit rates, etc., they are, those deposits which are already there, they are already fixed. New deposits that are going to come in, it is only, with respect to those that these changes will actually take effect. So obviously, many of them are 5-year deposits, so there will be no change, with respect to those people, who have already taken those deposits. So it will take some time, depending on, the tenor, the average tenor that the deposits already have. But it will be our effort, that we provide whatever support and liquidity is required, that this transmission happens as quickly as possible. MCLR, I think, happens, on a 6-monthly basis.
Yes.
So the last one, I suppose, most of the banks would be doing it in June and December to make it effective from January and July. So the MCLR, I think most of the banks, I think the policy is mostly to do it 6-monthly. And so come June, one should see some revisions.
Thank you, sir.
You want to add? Yeah, please.
No, I just wanted to,
please,
supplement on that. Essentially, the external benchmark linked rates are about 40% on the loan book, on which we will see more immediate impact. In respect of the book linked to MCLR, which is almost equivalent to the EBLR book, it typically takes about 2 quarters for the effect to play out, basis our past experience, because the reset periods are mostly 6 months, but there are also loans that are linked to 3 months or 1 year benchmarks as well. So typically our experience is that it takes about 2 quarters. And as Governor clarified, the existing deposits will have to be carried on the contracted rate. Only new deposits, the rates will change. So in terms of monetary policy transmission to the deposit rates, it again takes at least about 2 quarters. So that's a general trend that we have observed.
Thank you, sir. Sir, with your permission, last 3 questions.
Yes.
Thank you, sir. Next, I'll request Mr. Ben from New Indian Express.
Thank you, Puneet. Thank you, Governor. My question is about the 1 trillion tax giveaways in the budget. If that really takes those who are benefiting from the tax exemption limits, if that really gets translated into consumption, what could be the impact on inflation that? Of course, the budget, from the fiscal point of view, budget is not expansionary, so that makes your job easier. But from a consumption point of view, of course, consumption is fully, if those 1 crore or 50 lakh beneficiaries would be mostly from urban areas where the consumption has been lagging. So what could be the impact? Have you taken into account, or as some reports say that okay, the benefit is not 1 trillion, but it is at best it could be 25,000 crore. So it is not big enough to take into account the monetary policy, or you have looked at it and taken a call on the industry now?
All factors, as I said, have been considered by the Monetary Policy Committee in making its judgment. Obviously, the budget was announced, it was out in public, it was known, it was analyzed, and that was also taken into account in deciding about the repo rate cut. Overall, I think the budget is an excellent budget, both from growth perspective as well as I would say from the inflation perspective. Especially as you also mentioned, given that the deficit has been curtailed at 4.4 and not even at the glide path rate of 4.5%. And I am especially very, very pleased to note that agriculture, you are all aware that 46%, about 46% of the CPI basket actually is comprised of food. Agriculture gets the prime focus, in this. Of course, it will help not only on growth, but in the medium to long term, it will also help us in controlling inflation. Especially like to drive your attention to the program on vegetables and fruits. Vegetables, please keep in mind, has a 6% contribution in the CPI. Fruits has a 2.9% contribution, 8.9%. There is a scheme, there is going to be a program for food and for fruits and vegetables specifically. I think the inflation pertaining to fruits and vegetables would certainly have, I'm not privy to what would have gone into their minds, but I feel that would certainly have played in their minds. Similarly, I am very happy to note that a mission on pulses again I think has a weight of about 2.5% or so, 2.4 I think if I remember correctly. And pulses also has played a major role in the inflation that we have seen in the recent months. So there is a program there's a mission now which has been announced for pulses, and then there are, a number of other programs which have been announced for agriculture. I do not think, that this 1 lakh crore of tax relief, I think it was very much desired. Everyone was wanting it. Now that it is there, now counter questions are being asked whether, it will increase inflation, this, that and all. I don't think, those questions are really apt. And I don't think, that this is going to have personally, an impact, an upward impact, in inflation. There is sufficient productive capacity that we have today also, the capacity utilization levels are 75%. And with this tax relief, it will only help us in our growth, and it should not have any major impact on inflation.
So can I have one clarification on the economic framework for Jaran committee? Jaran committee was an external committee where RBI had members. But this RBI is reviewing, internally reviewing, or there is an external committee that is reviewing it?
Internal. It's an internal review. It's an internal review which was required to be done, which we will do because that is the time period, as DG Rajeshwar Rao mentioned, the time is over, so it was in for a due, so that will be internally.
Thank you.
Thank you, sir. Next we'll have Ms. Shyama from Doordarshan.
Hello, sir. Sir, my question is, does Trump's pro-crypto stance worry India? And if it does, then what will be the RBI's approach to it?
RBI's thinking on cryptocurrencies has been articulated very clearly, and there is no change in that thinking, because that thinking is based on what our understanding of crypto is, and our understanding of cryptos will not change because some policy has been taken by some country on it. So that remains, unchanged. That is our stance. Having said that, as some of you may be aware, that there is a group which is looking at what the country's approach to cryptocurrencies will be, and that group will give its recommendations based on which decisions will be taken by the government, and we'll all follow that. Thank you.
Thank you, sir. And the last question would be for Mr. Sachin Kumar from Financial Express.
Good afternoon, Governor. After RBI hiked risk weights on unsecured loans in 2023, there has been a significant moderation in growth of personal loans. So, is RBI satisfied with the moderation in growth of personal loans, or more moderation is desired?
I think the short answer is yes, we are satisfied. I don't think more moderation perhaps is required, but I'll request one of the DGs, in case they would wish to, supplement.
I think that answer you have given already. Just to give a rationale behind it, it was an intended impact. Regulatory measures were taken when certain amount of outlier growth was seen in a few segments. As we had anticipated, it is the very same segments which are witnessing additional stress or slippages at this point in time and year related. So the measures were well thought out, and it has had its intended impact. And as Governor clarified, this moderation is all right at this point in time. But as a regulator, we keep our watch on the incoming data, and if that warrants a measure, we will take it, taking into account materiality and proportionality. Otherwise, at this point in time, this moderation was expected, and it's playing out on the same lines.
So, is it correct to assume that now banks can resume higher lending on these segments?
It's primarily the business model that will be pursued by the business entities. It is not our intention to prescribe any particular rate of growth or a product mix. This varies from entity to entity, and there are well-informed boards that guide the management in terms of what should be their growth aspirations. All that what we see is that whether they are in tune with their risk appetite framework, whether any excess eating happening in the system, or any possible risk build-up is occurring, or a concentration risk appearing in any particular area. That is where we would like to intervene. Otherwise, it is not our intention to prescribe any model. And just to use this opportunity to supplement to what Vishwanath as well asked. So every measure that there is an impact and cost analysis that we do, and we take decisions accordingly. So it is not that we will prescribe something which is not felt necessary.
Let me just supplement that see, we had not stopped, we had not prescribed or mandated or asked the banks or the regulated entities to stop lending. No. The risk weights, I believe, were prior to COVID, they were 125%. They were brought down post-COVID, and we saw, that there is now sufficient and perhaps more than the desirable level of credit growth. The risk weights were brought down to what they existed prior to COVID. So it's not as if, we have done something which is kind of abnormal. It is just bringing it back to what the risk weights were in normal times.
Sir, if I can ask a question in continuation to that. While I understand this 125 on unsecured is normalization, what about on NBFCs, sir? Because there was a proactive increase in risk weight in order to sort of curb NBFCs also concentrating in the sector. And today when we're talking about a growth-oriented approach, and they play a very important role in last mile credit dissemination, would you relook at risk weights on NBFCs? There as well, growth is really getting hurt.
No, maybe I can clarify, sir. See, essentially that particular segment was brought in because of the interconnectedness risk that was building up. See, NBFCs have essentially three types of resources: their own equity, their market borrowings, and then bank finance. Bank finance, which used to be about less than 30%, had gone almost close to 47% of their balance sheet as a resource. So, as I mentioned, we saw a concentration risk building up, resulting in an interconnectedness between two financial entities. So we brought certain additional risks so that gets moderated. Now if you look at it, the resources for NBFCs is more or less now distributed as 1/3 each. So again, it had certain purpose, which may not be, which is something which is holding good even today at this point in time. So I don't think there is a reason as to review any of these measures at this point in time. But as we clarified, that we'll keep watching the incoming data at any point in time. It's not our intention to stop any particular form of lending or business. It's our intention only to moderate, to ensure an orderly growth, keeping in mind financial stability.
Well, very important comments coming there. Apart from the policy, the big headline coming in is that the liquidity coverage ratio, or the LCR norms that were to kick in from the 1st of April will not be kicking in anytime soon. In fact, not until 31st March 2026. So FY27 is the earliest that we may have the revised LCR norms kicking in, which had proposed an additional 5% liquidity buffers to be maintained by banks to consider for the runoff effect because of the digital nature of banking in these days' time. So that is a huge relief coming in for financial entities, for banks. Apart from that, the governor also making it very clear that the expected credit loss guidelines, the draft for which is yet to come out, and the project financing norms, which again had proposed higher provisioning for infrastructure projects. The two are aligned, and again, FY27 is the earliest that the RBI may even look at that. But for now, the big overhang of LCR guidelines kicking in from the 1st of April, that completely goes away. So that is one of the big takeaways coming out of this press conference. The RBI governor making it very clear that they will give banks and financial entities ample time to transition when it comes to these big guidelines and big revisions in the framework. Apart from this, the very last answer again, making it clear that there's no rethink on the higher risk weights that were assigned for unsecured loans, whether that was for bank lending to NBFCs
or for unsecured loans themselves. So no change there. Two big headlines coming in there. With that, let me invite our guests who are with us. Mr. Dinesh Khara, former chairman of State Bank of India. We also have Pranjal Bhandari, chief economist at HSBC, and Ashish Vaidya, the managing director and head of treasury and markets at DBS Bank India. Thank you very much to all of our guests for joining it. Mr. Dinesh Khara, first reaction from you on the LCR guidelines being deferred. How much of a relief is that? At least another year given to banks.
I think it's a very welcome move, which has been announced by RBI Governor, and particularly, when it comes to LCR will actually warrant banks to invest into certain defined securities. So I think this kind of a headroom which has been given to not to implement it before 31st of March 26 will also give enough elbow room to banks to really ensure that they can orient their treasury investment policies accordingly, so that there should not be a shock at all. I think it's a very welcome move, and also in the current kind of a situation where the liquidity was at a system level, liquidity was a bit of a concern. So I think it will ensure that there is enough liquidity in the system, which will help in supporting the growth initiatives of the economy.
Mr. Khara, did you get the sense that there may be a rethink on this increased provision requirement itself, apart from deferring the deadline by another year? What was your reading of what the governor and the deputy governor said on LCR?
I think they have very clearly mentioned that they have invited the responses from the regulators, and they are actually evaluating all those responses. So I expect that it is going to be some kind of an inclusive policy which will keep in mind the responses of the regulated entities, and if at all it helps in achieving what the RBI is looking for in terms of achieving through implementing this LCR, if at all that can be achieved through some other means also, I think they are quite open for that. So this is very welcome, I would say, from the regulated entities standpoint. But yes, of course, they are having in mind the kind of changing realities, and also with the kind of digital coming into play and how the money can move in no time. So I think that's something which is the guiding factor when they are thought in terms of implementing LCR. So they will try to strike a balance between what is required for this kind of paradigm change which has happened over the years, and what ensure the stability of the system.
Mr. Khara, quickly before I move on to some of the other topics, the project financing guidelines, we of course know there's been a lot of pushback from the banks on this additional provisioning requirements for infrastructure projects. The indication again from the governor seems to be that they will be released along with the expected credit loss guidelines, where the draft has also not been formed yet. So you think that is out of the picture until ECL guidelines are drafted and consulted upon? Project finance, the additional requirements will no longer be, put on banks at least until FY27.
Yeah, because there are overlaps as it is between the provisioning which is done through the ECR and also ECL, and also with the project financing additional provisions which are required to be done. So I think they are trying to really ensure that there should not be any overlap and there should not be any excess of the provisioning which should be there, because eventually all said and done, all these kind of provisions will have an impact on the credit cost and will eventually show up in terms of the cost of lending also for the banking system. So I think it's again, I think it's a very, very pragmatic step which has been taken, and I'm sure it will go a long way in terms of supporting the project finance initiative and the growth initiative.
Well, Pranjal, thank you all for standing by. Pranjal, what were your key takeaways, from the policy announcement? Were you at all disappointed to not hear more on liquidity? What did you make of the comments?
Yeah, I think, what stood out for me in the press conference was when he spoke about marks, do we attempt to get just pass marks or full marks? And I think in that context, I would actually give full marks to this governor, because at the end of the day, he's been able to tread this very fine line of bringing about more flexibility in existing frameworks in order to give you better growth outcomes, but not really junking all of these frameworks, working within the very frameworks. And I think that was really the master stroke. If you look at what's happening with monetary policy, he spoke about working on the flexibility embedded within the policy. So you don't really have to get to 4% inflation before you start cutting rates. But as long as your models show you that you're in the right track and you're getting to 4%, which his forecast did show eventually, you can start cutting rates already. So that flexibility, I think, will give very positive growth outcomes. And I think the similar thing we've seen for the regulatory front as well, right? He's not junking all the LCR and all of these norms that they were talking about, but he's trying to postpone them a little bit and also staggering their implementation, giving the markets better time to basically come to terms with all the big changes that are going to happen. So I would say on the whole, very positive. This is very important because if at this point of time he had given a signal that he is not going to stick to previous old frameworks, then I would have said that people would start putting questions to the macro stability of his actions. But I think he's given us the best outcome.
All right. Ashish Vaidya, you think this is the best outcome we could have got, deferring the LCR guidelines, saying that they will be, proactive when it comes to liquidity, giving some, as what we're hearing, more realistic sort of projections as far as growth is concerned at 6.7% and delivering that 25 basis point rate cut that the markets had asked for. Ashish?
Yeah, I quite agree. Actually, this is probably the best possible outcome which the governor has actually delivered. It's really not important to look at today's market moves because that will be actually driven by more of opportunistic position by traders. But I think a lot of decisiveness which the governor has already displayed before in the last 1 month while he took the liquidity measures, and the way he has gone about explaining as to what kind of forward-looking thinking and the nimbleness with which he is looking to operate within the parameters that have been defined for the RBI, I think is an excellent outcome. So I think we are really looking at it positively, and it will actually bring in a lot of stability and continuity in the market.
Okay, Mr. Soumya Kanti Ghosh, what was very interesting is the governor alluding to the flexibility provided by the inflation targeting framework, not repeating what we've been hearing through the year about getting to that 4% CPI mark before the Reserve Bank of India can act. So the RBI is going to be forward-looking. What do you make of his comments and what we can expect, going forward from here in terms of further rate cuts?
Thank you, Ritu. I think there are a couple of paragraphs in the policy that are very well communicated to the market. I think this is the paragraph on inflation targeting which you are talking about. And I think this is basically a excellently and well-crafted communicative statement to the market, and it puts to rest about the market cacophony or the cacophony about not sticking to the current inflation targeting regime, tweaking it or otherwise, because it gives a sense to the market that the stability and continuity in macro policy, which has been the hallmark of the monetary policy in the last 3 to 4 years, remains in force. And that's why repeatedly you will see that in the press conference, the governor also pointed out his financial stability has an overarching aspect of this monetary policy. And that is possibly the reason why all these regulatory measures are now kept in abeyance, or they will be implemented as and when the time comes. So from that point of view, it's a sense of continuity, stability to the and flexibility to the policy, operating policy framework. And I think that a statement on inflation targeting, even on exchange rate, if you actually go through the footnote on the exchange rate, you will find that the 3.2% depreciation on exchange rate, which the governor talks about since the American election, that is almost synonymous with a 2.4% dollar appreciation. So what he's trying to say that the recent disturbance in the exchange rate is more a reflection of the market forces and the global uncertainty. So from that point of view, I think the policy is more about well communication and also importantly more about footnotes, which you need to go in detail to get into the nitty-gritty. And regarding the future trajectory that you have seen with inflation at 3.8% next year, growth at 6.7%, I think that opens up further space for rate cuts. And if the inflation continues to surprise on the downside, this month's inflation number could actually be a significant downside as the vegetable prices have corrected significantly. We can see more rate cuts in the offing, and that could be more than the consensus if the global geopolitical uncertainty stabilizes a bit in the next couple of months.
And what is that consensus, Mr. Soumya Kanti Ghosh? We've been getting differing views ranging from 50 basis point rate cuts to 75 to 100 basis point rate cuts in this cycle. What is your view?
No, I think if the global geopolitical uncertainty stabilizes, I think 50 basis point rate cuts, which was the mostly the consensus across the market domain, I think that could become an outlier in the coming days if we go by the inflation forecast.
Okay, and Pranjul, what is your base case in this cycle, given the 2% kind of an inflation outlook for the coming year?
Yeah, so look, we are expecting another 25 basis points rate cut in the April meeting, so making this a 50 basis points rate cutting cycle. And to the extent liquidity is sufficient, I think that on itself will also give a 25 basis points rate cut. So effectively a 75 basis point rate cut, if you also include what happens via liquidity. We don't think it's going to be more than this because at the end of the day, you really have to also look at global volatility. And I think our BOP and balance of payments, current account don't really support a very deep rate cutting cycle at this point of time. I also think there's going to be more liquidity measures that will be announced, in fact, as early as end April. So basically 2 weeks from now, because my sense is otherwise in March, liquidity will go back into, a substantial deficit. So my sense is that, more liquidity steps will also be announced. They won't announce today, but that doesn't mean they won't be announced because the promise of sufficient liquidity is there. And finally, many of the things and frameworks that are going into review, I think will be very interesting. I think the economic framework will be extremely interesting because over time, it will also tell us about how much dividends can the government get from the RBI.
Okay. Thank you very much, Tony. I just wanted to ask Ashish. Ashish, what did you understand about the liquidity? Did it give an impression that where they see a deficit they will give? Or did you get a feeling that hence, because he said that we are looking at liquidity not just interbank but also durable, including the government's liquidity or what is with the government. Is it giving a sense that henceforth largely banks will be lending in SDF rather than borrowing? They will ensure that much surplus?
So Lata, good question. So let me give you my take as to what exactly I have understood. Clearly, I think he has drawn a distinction between durable liquidity and the transient liquidity. And that's actually very important. And if you look at his actions in the past, like last 1 month, I think RBI has come out very decisively in terms of giving liquidity to the market. I think broadly what he is really committing, and I think people will have to start to take him at real value. And that's where people will find clarity emerging as they go ahead. Not to look for immediate liquidity actions just because there's a policy or something. I think the way the RBI has conducted, very decisively, despite rupee weakening, the liquidity measures, both in terms of OMO, swap windows, I think that's great. I think markets, to my mind, should factor in about 60-70% of durable liquidity and about 30-40% of transient liquidity. Eventually, I would think that the liquidity will move towards a surplus, like the other panel members are saying, and which I completely agree. You probably get a rate cut next, and with probably a stance shift, and that really tilts the liquidity into a positive territory. So that's what broadly my understanding is. I think the governor and the RBI is completely in control and decisive in terms of how they're going to manage the liquidity.
Okay, fair enough. May I ask, therefore, Mr. Khara, so you think, therefore, that the rate cuts will get passed on? And secondly, he made a lot of reference to asking banks to lend in the interbank call market. The statement said that we are not restricting any such lending because interbank call has hardly 15,000 crores. Sometimes the volume is very low, whereas in the tripartite repo it is in lakh crores. So is he removing any trepidation banks may have, borrow from repo and lend in call? He's removing that trepidation. Do you feel that way, that it was positive? So 2 questions. Do you think it will get passed on quickly? And will there be more flow in the money markets?
I think the intention of banks to participate more and more into the interbank call money market is essentially from that point of view that more and more flows should happen. And when it comes to the trap market and the call market, there is whatever differences are there in these two markets, they would get evened out. That is what the intention seems to be. And your second question relating to, the passing down the interest rate benefit reduction in repo. Repo, of course, is something which is one of the determinant, because when it comes to external benchmark linked interest, there, of course, it will get passed on. But if at all external benchmark was essentially linked to repo, then only it will get passed on immediately. Otherwise, if at all it is linked to MCLR, etc., then...
Mr. Khara.
Yeah, sorry.
No, Mr. Khara, he is also promising liquidity. And therefore, my question is a little medium term. Do you therefore expect that this craze for deposits, the banking competition for deposits will slow down a bit because Reserve Bank is committing to giving more liquidity? And therefore, if not like in 1 month, in a couple of months, deposit rates will start falling?
See, actually, when you look at the banking business, they look at RBI as not at the first port of call when it comes to the deposit or the liquidity. They actually look at the bank, RBI as perhaps the last port of call for augmenting their liquidity. They need to have the deposit base. Unless and until they have a stable deposit base, they cannot really plan out their loan strategies, etc., etc. So I think when it comes to deposit, eventually, the interest rate on the deposit will eventually be the function of the overall liquidity, which is stable liquidity in the system. It will not be the transient liquidity as it has been mentioned. So durable liquidity only will influence the interest rate. That is what my take is.
Okay. No, the reason why I'm asking you is a lot of bankers in our Ritu's and mine preparation to the monetary policy, bankers were saying that, if they give us some comfort that, okay, now we are happy with the credit deposit ratio, then we can start chasing credit. If they give us some comfort that liquidity will be there and that we are not constantly going to them to borrow, then we will have greater confidence in cutting deposit rates. This is what bankers told us in the run-up to the monetary policy, and he seems to have given both. They seem to give confidence that, okay, now the credit deposit ratio is fine, and they seem to give confidence that we will proactively give liquidity. That was the word they used. So I'm asking, will credit growth improve?
I think credit growth will improve depending upon the opportunities which are available for lending in the market. And lending in the economy, if at all there is an overall economic growth, there would be certainly, banks would be happy to lend and also generate income. That is what I would say that all bankers will think like.
Ritu?
Well, there's one more thing I wanted to highlight, Mr. Khara, was, the very last question on the higher risk weights on unsecured loans. Clearly, the indication is, yes, the RBI is satisfied with the pace of, growth in unsecured segment coming down drastically from 2 years ago. But it doesn't look like there is a rethink on, reverting back to the risk weights that were before they were increased. Mr. Khara, is that the expectation, these higher risk weights, especially for bank lending to NBFCs, are to continue, so there's no relief on that front?
No, I think considering the fact that the kind of delinquencies which are seen in the unsecured portfolio of the various banks, but I don't expect that there would be any kind of a relaxation when it comes to the RWA for the unsecured loans.
Very much the messaging from the Reserve Bank of India as well. Quickly, Lata, you had another question to add.
Well, not question as much as a takeaway which we got, because the governor also spoke to us off the press conference, off the auditorium. So before we wind up, I just wanted to say that the first or the second paragraph, I think, where he speaks about flexible inflation targeting, I think that was an important point he made. The question was, why are you taking it up at all? There were statements, if you remember, in the previous economic survey, where the request was that food should be excluded from the target. So it appears that that statement was there to commend the flexible inflation targeting, to say it has worked well, because it's about 10 years, 9 years to be precise, and they wanted to praise the flexible inflation targeting framework. So I think that's very important. The framework is not in question. That was a key takeaway we got off the auditorium when the question was asked to him, why did you raise it at all? And he said, I raised it to commend what is a framework that has worked very well through COVID and through turbulent times. I thought that that's an additional information that was needed. Thank you very much, Mr. Khara, Pranjul, Ashish, and Shaumyu for being with us. Thank you, Ritu, as well, for going through this monetary policy framework, monetary policy analysis. It looks like it's an extremely well-balanced policy, giving inflation coming down its due share and at the same time retaining most of the caution that is merited because of the uncertain global environment. Thank you very much for watching our monetary policy special.
Hello and welcome to Midcap Radar. We welcome you with M&M's Q3 numbers. The company's top line has seen a growth of about 18%. This is driven by a 20% jump in the company's auto business. The EBITDA has come largely in line with street expectations. EBITDA number at about 4,400 crore rupees, and profits too have gone up by 20.8%. These are very slightly lower than street expectations, at least on the bottom line. On the bottom line, the CNBC-TV18 poll was for a growth of about 29%. Compared to that, the company's delivered about a 20%, 21% bottom line growth. But again, these are very strong numbers and the stock is holding up in the green. Margins in line at 14.4%. So top line growth 18%. Margins at 14.4%, and this is an expansion versus the 12.8% clocked in the comparable quarter of last year. So margins for the company are up 160 basis points, and that is driving a 21% increase in the company's profitability. Revenues in line, margins in line. Profits too are very healthy at 21%, but again, you would say maybe slightly lower than street expectations. M&M has been one of the best performing stocks. I think last year it was up close to about 80-85%, and in 3 years, the stock has given a return of close to about 250% because their SUV portfolio has been doing very well. Tractors, they've always been the dominant player, and that has been driving growth. So the volumes for the company have been very strong. I think in Q3, Sudarshan was telling us that volume growth was 16% in auto and about 20% in tractor. These are the internals. We've got the auto business numbers up 20% growth on a year-on-year basis. So, at least these are the few internals that we have right now. Auto business EBITDA seems to have seen an expansion because the top line growth is 20%. EBIT growth is close to about 37%.
Absolutely interesting numbers surely coming in, and there are going to be a lot of factors that one should watch out for in terms of commentary also, right? Like you were mentioning, volume 17% is what Sudarshan has highlighted. So keep an eye out on that. We'll also want to watch out for the ramp up that one could see coming in from the XUV 400. So what is that? Strong volumes is surely something that we're seeing coming in from the company. Auto segment, the EBIT that we're seeing is good. Agri business EBIT is at 42% up YY, 30% uptick on a quarter-on-quarter basis. The stock is seeing some bit of a gain and momentum coming in, and auto business EBIT also is at 9.7% versus 8.5%. So we're seeing an improvement even coming in on the EBIT front of individual segments as well. So yes, largely when we are seeing in terms of estimates, margin has met the estimates of the street, revenue is in line with the street estimates as well, and overall versus the poll, even the EBIT performance has been good. Interesting to watch out for in terms of that front.
The stock is now moving up. Yes. It was up 0.5% when the numbers came out. It dipped a tad bit, but now again it's up close to about 1.5%. That's M&M for you. Pull up a 3-year chart of M&M or 2-year chart, and you would see the kind of outperformance M&M is clocked in vis-a-vis peers because its portfolio is doing very well. You know, the XUV 500, 700 has been sold out. There's a very, very long waiting period. Tractors, Tractors has also had a pretty good, run given the monsoons have been, normal. So M&M has been on the front foot, 85% up in the last 1 year, 250% in the last 3 years. And if you look at a 5-year CAGR on M&M stock price, it's given a return of 40%. So true wealth creator in the large cap space. Gurmeet Chadda, managing partner, CIO at Complete Circle, is now with us to discuss the numbers. Gurmeet, your initial thoughts on M&M?
Hello?
Yes, Gurmeet, we can hear you. Did you have a chance to go through M&M's at least?
Yeah. So, I think a good set of numbers. I think if you see revenue, they've crossed 30,000 crore mark. EBITDA is, I think, in my view, again, an all-time high at almost inching in at about 4,500 odd crores. And there is a bit of a margin expansion. I think what is, good here is the fact that they've been focusing on, they've regained their market share in SUVs. It's back at about 20%. I think the new EV launch has happened. They've started the bookings. The response has been pretty good. I have a few clients who are very large dealers of M&M in North. I think there's a lot of excitement there. Tractors, they are gaining market share. And the best thing has been since Anish came over Hello? Yeah.
Yes, we can hear you.
Anish came in. I think the focus on capital allocation has been pretty solid. They have cut down on loss making. JVs they had clear allocation towards how business is to be done. There was one bit of a blip when they bought some stake in RBI Bank, which Street did not like. But I think that clarification came that it was just an investment and they had no plans as such. So I think pretty constructive, and valuations I would say are modest, would not say reasonable. But I think the new EV and an uptick in rural demand could still give some legs to M&M.
Okay, so Gurmeet, do wait on with us. We do have Sudarshan who's joining in with us, who's done some number crunching in terms of the M&M's Q3 performance. Sudarshan, what are they looking like versus the CNBC-TV18 poll? Any more highlights that you could shine on these numbers?
From the first look, it's looking a very strong set of earnings. Even expectations were elevated. Company has managed to meet estimates on all the fronts, whether you take auto segment or farm segment. So overall revenue was 30,500 crore against our expectation of 30,600 crore odd. So it's almost in line. EBITDA has come in at almost 4,400 crore. Again, in line with estimate. Margin company has managed to hold on to the levels above 14%. It has come in around 14.5%. That is also almost in line. If you talk about the segments, for auto business, revenue has increased 20% year on year, and even sequentially, if you look at, it's up 6%, and even EBIT is up 37% year on year and 8% sequentially. Agri business, again, 21%. YOY 26% sequentially. EBIT for agribusiness 42% up YOY and 30% sequentially. So it's telling you, as in morning we were talking about the two segments, basically SUV and tractor. Demand has been strong for both these SUV and tractor, and the leader is M&M. So led by healthy volumes, company has managed to report a very strong set of numbers for Q3. But we have to see exactly what does company say on the demand front, if the demand is sustainable, and how is the demand going on in current quarter, and how the demand has been for the recently launched electric vehicles. So these two, and last is the considering the demand for tractor segment, if there is a pickup or if there is an increase in FY25 growth estimates, because currently it has been like mid-single digit growth. So if we'll have to see if M&M says that there is an uptick expected as well. So considering all these things, first Q3, very strong set of numbers, but all eyes would be on company's commentary related to demand.
I remember earlier this month only, right, Sudarshan, they had launched those two, native electric, purely electric born vehicles. I think it was 6BE, something on those lines.
6BEV.
6BEV, yeah. And there was so much excitement around the stock price, on the prospects and what it will do. And it was also fairly competitively priced versus peers. So have they given any indication of the bookings for that?
So I'm yet to see exactly what the company has commented about bookings, but both those products were feature-rich products. And one advantage that all the brokerages were talking about, those two products, that not only feature-rich, but the pricing part was very important, and company has managed to announce the price, and basically prices were very attractive. So considering these two factors, and I feel the demand obviously would have been strong.
Okay, thank you very much for that. The key positive is that growth continues for M&M, 18% top line growth, and both the auto business and the tractor, the farm equipment business is doing well, and there is margin expansion. Margins for the company have expanded from 12.8 to 14.4% on a year-on-year basis. That's a 160 basis point margin expansion, and that is something that the street likes. I think the question now is, because of the run-up, how do the valuations stack up?
Absolutely. Let's go across to Gurmeet on that front as well. And Gurmeet, like Rima was saying, how is it going to be in terms of valuation? M&M numbers have been good. Commentary is what everyone is watching out for. But on the valuation front, does it make a good bet right now?
I think it should be more like, something which is very consistent in the large cap space. It's not stretched, it's not cheap. It's 25, 30 times. And this is one auto stock which hasn't really corrected, along with Maruti. Actually has done well in the crisis. See, other thing is, if you look at its powertrain a few years back, pre-COVID, it was 72% diesel. Right now, if you look at it now, the diesel is almost 50-55%. There is EV which they are launching. There is CNG which they have included. So even the powertrain now is catering to different segments, which I think augurs well. Depending on how the landscape is changing as far as clean energy goes. And I think this new EV launch, as I said, few of the distributors who are clients went for the launch in Chennai in their R&D center and had some great feedback on that. So I think they've just started the bookings. I think immediate trigger could be how strong the bookings are. Remember when they did this all four SUVs back to back, which is XUV 700, Bolero, if the bookings pick up, there could be some, although I'm not commenting on near-term movement, but there could be a bit of momentum in the near term because of that.
Okay, Gurmeet, thank you so much for joining in with us and giving us insights in terms of M&M's number, what we should be expecting in terms of the stock going forward as well. But key is going to be the commentary that we're keeping an eye out on. As of now, M&M is trading almost near the day's highest point, so keep an eye out on that. Let's move on, and the battle for control over Religare continues. Supreme Court of India directs the Berman family's open offer will not close today as scheduled earlier. Ashmit is joining in with us to give us more details on this one. Ashmit, what is the latest update that you have here?
Well, clearly the confusion as far as control of Religare continues. The open offer that had been issued by the Bermans was expected to close today, which was expected to give some finality to the matter. But bear in mind that the US-based, the Florida-based businessman, the investor Digvijay Gaikwad, had moved the apex court. That hearing was today, it just concluded a few moments back. And importantly, in that hearing, the Gaikwad had essentially said that why are we asking the minority shareholders to settle for 235 rupees a share when I, Gaikwad, am offering 275 rupees a share. From therein, there were questions on technicality, and on the basis of that, essentially what the Supreme Court has directed as an interim direction is that, number one, the Berman open offer will not close today as was scheduled. The tendering process was expected to close today. That will not happen. Number two, the Supreme Court has directed for Gaikwad to deposit an earnest money deposit of 600 crore rupees by February 12th. That's Tuesday of next week. So they have time till Tuesday to make that earnest money deposit of 600 crore rupees. Third, and this is critical, the open offer that was issued by Bermans will remain open till the earnest money deadline of Tuesday next week, which is February 12th. Till Gaikwad makes that deposit on February 12th, this open offer will continue to remain open. The tender process will continue to remain open. And what happens in a situation that Gaikwad coughs up that amount of 600 crore rupees? In that case, the Supreme Court has added a fresh stipulation that this Berman open offer will remain open till SEBI takes a final decision on the Gaikwad application for an open offer. So clearly, there are a number of moving parts here. No finality yet, but for now, the Berman offer to remain open. But at the same time, the Supreme Court did make an observation that this open offer, they're doing it at their own risk, the Bermans, because should the issue get decided in favor of Gaikwad's, the words of the Supreme Court were, they'll have to cough up a lot of money.
Okay, Ashmit, thank you so much for giving us the latest update on Religare. But let's just mark the flashes at the bottom of the screen. We have Ola Electric that has reported the numbers. Revenue seeing a decline of 19%. Losses have widened further for the company. EBITDA loss at 460 crore versus last year of 301 crore. Losses also are somewhere at 564 crores versus 376 crores. So clearly we are seeing that losses are widening. There's a bit more pressure coming in, and revenues also are seeing a decline. Stock has slipped in trade and is down almost 2% as of now.
I was just going through the Ola numbers. In Q1, the company's top line was 1644 crore. Yeah. In Q2, it came down to 1214 crore. So even in Q2, there was a sequential decline in the company's revenues, and that has further come down to 1045 crore. So we've seen a significant moderation in the absolute revenue number. 1644 in Q1 comes down to 1214 crore in Q2, and now down to 1045 in Q3. The Ola Electric stock price too has taken, a bit of a tumble. Right now it's down close to about 2.5%, but its 52-week high was close to 157 that it hit on the 20th of August. So from that level, 157 down to 70, the stock has more than halved in the last, 5-6 months. And the numbers are a bit disappointing. I remember even Q2 was a disappointing quarter, but losses have widened for the company, and the absolute bottom line loss is 564. And remember, shareholders, investors are going to have another option to play the pure electric two-wheeler space, because Ather Energy has also filed its DRHP and it's readying its plans for an IPO. So, you're going to get another choice, right? If you want to play for the entire EV penetration, you want to play that story, now you have an option there too.
Absolutely, but as of now, we're seeing pressure coming in on the stock. Numbers not looking that great. On that note, we're going to slip into a very short break, but don't go anywhere. After the break, we have more numbers to talk about. Aadhar Housing Finance, they've reported their numbers. What are the outlook of the company going forward? We do have the management waiting by.
policies, coupled with adverse weather events, pose risks to the growth and inflation outlook. This calls for the MPC to remain watchful. Accordingly, it decided to continue with a neutral stance. This will provide MPC with the flexibility to respond to evolving macroeconomic environment. This growth inflation dynamics opens up policy space for the MPC to support growth, while remaining focused on aligning inflation with the target. At the same time, the MPC felt that excessive volatility in global financial markets and continued uncertainties about global trade policies, coupled with adverse weather events, pose risks to the growth and inflation outlook. This calls for the MPC to remain watchful. Accordingly, it decided to continue with a neutral stance. This will provide MPC with the flexibility to respond to evolving macroeconomic environment. This growth inflation dynamics opens up